everyone, welcome back to AlphaWave Finance. And today is June 29th, 2025. We have four major market-moving stories on deck. The US dollar is collapsing. Nvidia insiders have liquidated over $1 billion worth of shares. The Federal Reserve faces mounting political pressure, and Bitcoin continues its steady rise. Over the next half hour, we'll dive deeply into each event, what caused them, why they matter, and exactly how you can adapt your investment strategy. First up, the US dollar. This morning, the dollar index dropped to its weakest level in more than 3 years, off roughly 10% since the start of 2025. Investors are pricing in a scenario where President Trump may undermine Fed Chair Jerome Powell by installing a more compliant successor, possibly as early as this fall. Reuters.com plus 13, Reuters.com plus 13, TheEdgeMalaysia.com plus 3 Reddit. That raises red flags. Dollars lose safe haven status when central bank independence is at risk. The Bank for International Settlements, BIS, often called the central bank of central banks, warned that this dollar slump is happening amidst a pivotal moment for global finance. They highlighted trade protectionism, political meddling, and fragile bond markets as key destabilizers, thetimes.co.uk. To BIS, this signals deeper systemic risks spilling over from FX into credit and liquidity markets. According to Reuters and FT, economists caution that if the dollar crisis deepens, driven by tariffs, fiscal stimulus, and Fed interference, we could see a fragmentation of global finance. Hedge funds, banks, even central banks could undergo stress, and politically charged Fed decisions could upset global FX reserves and capital flows. What does all this mean for you? A falling dollar pushes up the cost of imported goods, from electronics to energy, impacting U.S. inflation. On the flip side, it can boost earnings for multinational corporations exporting overseas. As an investor, diversifying into commodities, foreign assets, or even alternative currencies becomes more attractive. But you've also got to monitor commodity-driven inflation. If raw materials climb, certain sectors like consumer staples and industrials may see margin pressure. We'll talk later about how to hedge these dynamics using strategic exposure to gold, the Swiss franc, or even Bitcoin. Next headline, Nvidia insiders have sold over $1 billion in stock this year, with more than $500 million unloaded in June alone. This includes CEO Jensen Huang, who finally entered the market again after a cooling-off hiatus since last fall, including selling 300,000 shares in this latest wave. FT reports this wasn't panic. It was a prearranged 10b5-1 plan triggered by approaching price levels, Reuters.com. But even so, insider sales at these levels raise investor eyebrows. Are company leaders scooping up cash before a slowdown? Or is it just disciplined profit-taking? Regardless, Nvidia remains on fire, up over 60% since its April lows thanks to renewed AI enthusiasm and easing tariff fears, Reuters.com. This rally has catapulted Nvidia back to a $3.8 trillion market cap. So what's the investor takeaway? Don't freak out, but do stay alert and monitor further insider actions. Next, the Federal Reserve. Trump's public criticism of Powell continues, and rumors of appointing a shadow Fed chair loom, a move that could undermine central bank independence, FT.com plus 5, Reuters.com plus 5, Reuters.com plus 5. Internal Fed communications leaked hint that some policymakers fear political meddling. Markets are currently betting on about 175 bits per cent of rate cuts by 2026, even 25% odds of a July cut, despite inflation still hovering above target, Reuters.com, Reuters.com. But if Fed autonomy erodes, bond markets could shake violently. Think yield spikes, a flattened yield curve, and rising volatility across risk assets. Coming soon, July 3rd non-farm payrolls and a wave of IPOs, 7 or more across tech and finance. Those can sharply shift market sentiment. If jobs miss expectations, it could reinforce the Fed dovish narrative. But if strong, that political backdrop will create even more tension. Meanwhile, U.S. equity markets are still rallying. The S&P and NASDAQ once again flirt with all-time highs, supported by AI megacaps and easing fears. Yet rising yields and geopolitical risk, tariffs between Canada, China, and potential Middle East flare-ups remain real threats. Smart investors can't be 100% long. Consider hedging with bonds or inverse ETFs. Last but not least, Bitcoin. It's trading at 107,000 to 108K and showing institutional resilience. MicroStrategy hasn't slowed down, and crypto ETF flows continue supporting price discovery. Combine that with talk of crypto mortgage innovation led by Cathie Wood, this is one to watch. Despite bullish, warnings are rising. Regulatory concerns, profit-taking by whales near six-figure levels, and looming derivatives rollover events could trigger volatility, quiverquant.com. Summing it up, the dollar slump may fuel crypto and commodity inflation. Nvidia's selling reveals caution amid AI fever. The Fed's politics-clouded path adds unpredictability. Equities rally but remain exposed, and crypto stays strong but sensitive. So what should you do now? Here are 4 actionable steps. Diversify currency and commodity exposure: gold, FX, crypto. Watch insider activity in tech for timing signals. Track Fed narratives and labor data for rate clues. Treat Bitcoin as part of a diversified growth bucket, not all in. We'll run a quick example of how to build a balanced portfolio in this climate with AI, crypto, gold, and cash hedges to illustrate risk management. That's your deep dive for June 29th on AlphaWave Finance. If you found value, smash that like, subscribe, and drop a comment with your biggest takeaway. Let me know, are you entering crypto or watching the dollar? See you in tomorrow's wave.